Inflation rates, what you get for $2 million, what you get for $1 million, and inventory. Let's get moving. All right. Inflation cools in January, keeping the Fed's rate cut option open. Now, this was done on February 13, which was only a few days ago, but understand that inflation does play a huge role in the market economy, especially when it comes to real estate. It does, whether we like it or not. Now we look at the Fed rate cuts and all that other stuff, all that the Fed rate indicator, and if it's 2.3 to 2.5, it's a big deal for us, only because we need to know what's going on in short-term money, because long-term money plays a little bit of a role in that. That's why it's important for us to see the economy on the whole. That's why I do these big picture articles and what that means to you, because when it comes down to it, inflation is a huge cut, right? And that's why multimillionaires are investing in real estate, because it's a hedge on inflation. It's just a natural place for multimillionaires to put their money to hedge off any massive inflation things that they just want to hold sit. Why? Because 5 to 10% is way better than the 0.4% you're getting in the bank. So cash wise, you can always use cash out of that, borrow money from your assets, so it just makes sense for us to understand that that money that you use should be invested in something like an asset that will continue to increase over time. Could you lose money in the short term? Absolutely. Just like any kind of stock market thing, any metals or what have you, Forex, if you hold on to it too short of a time and you lose your ass, you're going to lose your ass, period. That's just the way things are. So it's important for you to understand where we are with this. The CPI, employment, all that stuff, it does play a major factor, because if there's fear of the economy tanking, why would I buy a house? How am I going to pay for that? How am I going to do that? So I understand that it's important for you to understand it, right? And the number one reason why buyers don't buy a house and stay renters forever is because they're waiting for the market to crash. But guess what? A lot of the people I know were in this predicament here, and when the market kind of took a dump, it wasn't enough for them. They were just saying, I think it's going to go down. By the time they realize it's too late, then they've lost their money. They've lost the chance for them to buy it. So I'm saying this year, I think, is the time for you to get into the market. It's not that you haven't lost money, you haven't lost value, but I think if you buy into it now, you're going to see a major uptick in the next three to 6 months. It's just my feeling, not a crystal ball, I'm not telling you to buy, just saying that over the last 10 years, I think this is a great time to buy, because rates are still at 6.3, not the all-time high of 8 or 7.71. We're still pretty daggone low, 7.18, 7.11 on a 30-year fixed, even though it says 6.27. But we're also seeing rates drop down if you pay a point or so, down to 5.25, 5.5. Why is that important? Because that's the parity point for buyers to enter the market. We want to see the market come down. And this is important for you to understand. If you're a buyer, this is the time for you to buy. I know it's affordable, unaffordable, but there's also houses out there that you can't afford, right? If you're living in the Silicon Valley and you can't afford $1 million house, I understand. Maybe you move out of the Silicon Valley. Just saying. I want you to watch this real quick. Kind of fun, because this is all part of my
All right, everybody, now that we have a completely new Homes.com with a beautiful new design and the most in-depth info, all we need now is a new name.
Do we?
So we're gonna lock the doors and stay late until we find that name that's synonymous with shopping for homes.
Here's a wild idea. Homes.com.
We're gonna go with Homes.com. We're gonna keep it fresh, innovative. Homes.com. We've done your homework.
It's important to understand why this is important. If not, hope my editor can cut that out for me, but there you go. Zillow was a great website for a very long time. Now they use high pressure tactics to use on their agents to put onto you as a client, whether you're a buyer or a seller, right? They force you to use their lenders. They force you to use their escrow company. I don't really care who you use. I have suggestions and I have great partnerships with people. And if you don't want me to use them, I understand. I don't put up a fight. I don't care. I want you to use a lender that you're comfortable with, as long as they know that they can perform at the speed that I'm moving. I want you to work with an escrow company, as long as they understand that they have certain needs and requirements that I require for you to be serviced correctly, right? I don't care if you do use them, but I put a line in the sand saying this is where it is. It took me a long time, 23 years, to get to where I am and understand which partners I can trust, including contractors and handymen and painters and landscapers. Like, we just did a deal on one of my listings coming up, this one right here, and we did the entire front yard, right? And he's like, do we need a plan? Do we need this? I'm like, just trust the vision, let him do it. And it turned out amazing. So part of that is marketing, part of that is project management, how to price your house correctly, because if your house isn't priced correctly, your house is going to sell on the market. Don't be a market maker. Attract the market, get your house sold. Stop dicking around with, oh, my house is worth X, because you just don't know. You'll never know what your house is worth until you put it on the market. My suggestion to you is sell it, list it low, and get it sold, because you do not control the final sales price. The buyers do. And there's a lot of buyers that are out there right now, and they're serious. You see that over the last couple of weeks, we've seen the prices go up, and the list price to sales price on pretty much every well-priced, well-accommodated home go for much higher than list price. And I can show you the numbers every which way you want. My parents are getting older. I have them situated in a 55 and older active adult company development in Henderson. And while they're older, they're still able to maintain their lifestyle. I'm helping them out with a lot of different things. My sister's helping them out with a lot of different things, but we always have these options and different discussions of what's going to happen if, because it's inevitable, right? A lot of things are happening. A lot of things are just going to happen that way. And that's just life. It's better to talk about it than be slapped in the face with it and not know what your options are. And if you're facing these questions, give me a call. I'm happy to walk you through different options. And it's not about selling your house. It's about talking to the right people and giving you the right options. And that's what we take care of for you. Gilda, what you get for $2 million. This is in San Jose, 95124. This is a 3-bedroom, 2-bath, 1,400 square foot home built in 1959. Very standard ranch house, 1,400 square feet, nothing great about it. Original kitchen. They just painted everything white. And I think this one's going to sell for a little bit faster because this thing's brand spanking new. Look, dated tile, right? Older vanity, nothing wrong with it. It's priced right. This thing's going to sell for 2.1 to 2.2. And it's been on market 24 days. I think what you're getting here is a great opportunity to move into a great neighborhood and put some sweat equity into a house. And that value there, $2 million, but for this area, you're going to see that the houses are selling for a lot more. And what you get for $1 million is Cohagan Court in 95139, which is South San Jose. It's just south from me a little bit, well, southeast. $1 million, 3-bedroom, 2-bath, 1,350 square feet. Wait, Vito, this one was 1,400 square feet for $2 million. Why? Because this one is in Cambrian, and this one is in South San Jose. And it's been on market 5 days. I can guarantee you this thing's going to sell pretty daggone quick, right? Let's take a look inside. 3-bedroom, 2-bath, 1,350 square feet, 1972. But it's in South San Jose. It's not a bad area at all, right? But this is all original. Look at the pink carpet. Original cabinets. Pretty original oven and stove. Look at that brown. Oh my God, I love that. I want that fridge. These fridges, I swear, I want to get, not going to talk about it, but these refrigerators, this old 1970s, they're going to last forever because they're made correctly. This whole house needs to be completely gutted and redone, but I think it's a great value for $1 million. Yeah, all day long. Look at this. It's exactly what you want. 3-bedroom, 2-bath, original, everything. Just get it on the market, get it sold. Buyers are going to come in and say, yep, I want this. I'll pay 1.2 for it. It's just the way it is. If you're interested in looking at these houses, let me know. I'm happy to do that. Nothing's changed. I'm not going to do February yet because we're still in the mid-month. I do that typically the last few days of the month, but I just want to let you know that everything's starting to tick up, right? We're going to see more actives come up. We're going to see this January. These numbers right here are from January of last year or this year, right? See, everything else is ticking up. Why? What does that mean? It means I think we're headed into a very, very normalized, right? Don't forget, 2021, we were in a firestorm. Post-COVID, we were in a firestorm market. Rates were historically low. Prices skyrocketed up. And then we saw massive inflation, which over the last 3 years, we've been healing. Last 4 years, we've been healing and trying to figure this out and trying to get it back to a soft landing, right? I think we are where we need to be right now to get back into a normal market. A normal market is where I sell 10 to 20 houses in a year. And 2021, I sold 24 and it almost killed me. Last year, I didn't kill myself. I sold 7 to 8 houses. I think the volume of houses are going to jump up to about 15 houses for me this year, but I'm not going to try. The reason why I'm telling you it from this point of view is because I know the market is there. I know that we're going to go back into a normalized market. And for us in Santa Clara County, in Silicon Valley, in the South Bay, a normalized market is the high volume Mondays, right? We're already at over $1 billion in revenue. We've closed 520 homes so far this year. Alameda, again, South Bay, right? I know it's Central Bay, but it's still South Bay. San Mateo, right? High cost, low volume, but still high volume. And Contra Costa, that's going to be your market maker right there this year. I think you're going to see Contra Costa as the place to move, mostly because Alameda has freeway issues and there are gentrification issues that they're going on. I think that's already popped. I think Contra Costa is the next place to go. Unless you want a super, super, super amazing deal, go to Napa.